Good morning, everybody, and welcome to Beat the Bell, presented by Kane Capital. So what have we seen so far this week in the markets? Remember, last Friday, the market rallied pretty aggressively. The squeeze was on. We finally broke out of that range that we were talking about. Monday comes around. We see continuation early before a full 180 reversal, leaving bears and bulls alike both very confused, wondering what is happening next. Yesterday, the market decided to chop around. It was a slower trading day. Today, we are slightly higher, about 9 points up in the S&P. So this is setting up for what is the most crucial CPI print year to date. That's a funny thing to say. It's the first of the year. But seriously, guys, tomorrow is going to be very, very telling. And to talk about it, we have a awesome panel with us this morning, starting with Money Mander. Good morning, Mander.
Good morning. Yeah, I'm expecting really not much today. I think all eyes are on the CPI print tomorrow.
I definitely agree with that. Diamond, good morning.
What's going on, guys? Mander had said it best. I mean, today is really just going to be in anticipation of tomorrow. Really excited for the print. Should give us some volatility.
All right, Ramsey Rippers.
What's up, guys? New year, new suit, new colors for the Mander. I haven't seen that suit yet. I like it.
What's that, the plaid shirt?
Yeah, the plaid shirt. And I don't know if I've seen that yet.
That's J. Crew.
Really good.
He went to J. Crew.
He's cruising. He's on crew control.
All right. Leave the hosting up to me, brother. Thank you. Mo Mamba.
Good morning. Yeah, you can't talk about how Mander dresses. You know he outdresses everyone. Let's get it, boys.
Yeah, he's definitely fresh. All right. And Snipes.
Good morning. Let's make some money. And God bless America.
Snipes, more energy, please. Go back to Snipes. More energy, please.
It's a CPI day, the pre-CPI day, man. We're still going to get something in probably. We're still going to eat. We're probably going to get some eggs Benedict, an omelet or something like that. But tomorrow, we're getting that steak and eggs.
Let's go. All right. I love it. Let's get started. Before we do, actually, I want to remind everybody that all of the charts that you see during today's episode are TrendSpider charts. The episode is brought to you by TrendSpider, so keep that in mind. And if you like what you see and you're watching on YouTube, you can go directly in the show notes, click on our link to get 25% off. If you're not on YouTube, you can take a screenshot right now. There it is. Let's continue. Money Mander and Noah, what do you guys got for us as far as Fed forecast and economic outlook?
Yep. Let's just dive right into it, right? Let's dive right into the meat and potatoes. CPI obviously is going to be the main topic. CPI is going to come out tomorrow at 8:30 in the morning. The last CPI came in at 7.1 versus 7.3 expected. If Ryan wants to throw up that chart and just show you guys the past several months of CPI data that we've had, it sort of looks like, like a little bit of a bell curve. We peaked back in mid to late 2022, and we've just sort of been on a steady decline since then. And that's sort of the expectation for tomorrow. So tomorrow's expectation is 6.5% on headline CPI, with little to no change in the month over month. And then 5.7% core with about 0.2 to 0.3% increase month over month. And so since CPI is going to be the focus, Mander and I thought that we would lay out the bull and the bear cases for both sides here going into CPI. And so I'll start it off with the bull case, right? Headline CPI comes in lower than expectations would obviously be the bull case, right? So we have several analysts have been calling for a tamer than expected CPI. So we would really, I think you would see basically a fall in the 6 month and the 1 year yields, which we've seen so far this year, right? Really for the past week, we've seen those fall. Granted, they did tick up yesterday, like pretty aggressively, but more or less for the past week, we've seen that 6 month and 1 year yield come down. And so a lighter CPI would sort of agree with what has been going on in the bond market. You extrapolate that out, and that would sort of give the Fed reason to further cut the size of their rate hikes, right? So right now, it's basically looking like a 25 basis point hike going to come in the February meeting. I think that a CPI coming in tamer than expected would definitely bolster that expectation at 25. And then you could even sort of look out further into the future and say, well, maybe they go 25 at their next meeting and 0, which would sort of put them their target rate at about 4.75 to 5%, basically what the markets are calling for right now. So regardless of how you feel about the markets, you have to admit that inflation really has been trending down since the peak in mid to late 2022. And Ryan, if you want to throw up that zero hedge tweet, we actually are seeing people start to take notice. And so JP Morgan reported that their treasury clients in their survey, their longs rose about 7 percentage points. The shorts dropped to about 6 percentage points, leaving positioning most net long in treasury since the end of October. So, I mean, really, regardless of how you feel about the market or what you think is going to happen, people are taking notice that there is a chance that we do get a lighter than expected CPI, and the markets may want to rally on that. And so people are sort of getting themselves positioned for that now. Furthermore, if you get a lighter print, right, you can sort of expect to see those yields to continue to come down and the dollar to continue its weakness. The dollar has been weak really for the past several months. And I think that would be just a further continuation of weakness in the dollar. Both of those have been severe headwinds for stocks last year, particularly tech and growth. So if we do see a lighter CPI print come in, you can expect to see those stocks rally in particular, as well as the market as a whole. But what does that mean for the market? Let's go ahead and look at the daily chart. You would have to think that just from a technical perspective, a lighter CPI comes in, we could probably see that 4,000 level on SPX. We have a gap to fill up there, and there's also that 200-day moving average. So that's probably like the bare minimum of what you would get on some sort of rally off of the CPI news. And then if it really came in light, I think that we could see even higher than that. So, from where I said, that's sort of the bull case looking at CPI on Thursday.
All right, and let me give you the bear case. I kept this completely objective for once. There's no subjectivity in this. And I can't disagree with anything Diamond just said. I think a light CPI print would result in all of those. However, let me give you the bear case here. So the Fed is obviously the markets are pricing in the Fed, bluff here the whole time. We talked about this on Monday. I think higher CPI, especially a higher core, really squashes this Fed bluff narrative and would shift that entire yield curve that we covered on Monday directly up 15, 20 basis points, pricing in that 6 month, which is the peak yield right now, right at 5%, if not a little over 5%, right? So I think that directly shifts upward. We see strength come back to the dollar, and that's obviously going to be a bloodbath for bond prices and equities there. So currently the bond markets are pricing in just under a 25% likelihood of 50 basis points in February, with 75%, a little over that, obviously going to the 25 basis point favorite here, which is actually down from December month over month, from 48% favoring the 50 basis point and then 40% for 25. So a bunch of movement here in the past month as we see what they're anticipating for the February meeting and interest rate hike. But it's still higher than expected numbers, could put the Fed at a position to front load rates here instead of progressively adding to them and going 25, 25, 0. And I will say for the 25, 0, 0 case, there's like a 14 or a 12% probability right now of 0% or 0 basis point hike coming in March. So right now it's 25, 25 is the favorite. I think a higher than expected print could put the Fed in a position to front load. That way they can be more reactive instead of progressively adding to that throughout the year. And it is worth noting that we said, right, multiple participants stated they were in favor of 50 basis points. Over the past couple of weeks, we just saw Bostic say that. I forget who spoke before him. There were a couple of people publicly stating that they were in favor of 50 basis points come February. So I don't know if that's a hint that they already have numbers before this or not. But really my biggest bear case here is that the Cleveland Fed nowcast projection, which comes out a couple days before the actual print, it's pretty much the Cleveland Fed's forecast and their own calculation. So it's not the official one, but they came out here, right? And so if we could show this chart, the Cleveland Fed nowcast actually had year over year main CPI forecasted at 6.64%, which is obviously over the 6.5% consensus, and month over month at 0.12 versus the 0.0% consensus actually has negative 0.1% forecast. So they're expecting it actually to come down month over month. Cleveland Fed still has month over month main CPI increasing. And then the year over year core is actually where it gets really interesting. They have year over year core CPI at 5.87%, higher than the 5.7% consensus, and month over month at 0.48% versus 0.3% consensus. So the Cleveland Fed nowcast actually has this coming in hot on all four metrics, main and core CPI year over year and month over month. So that's my biggest bear case here. If that comes out to be accurate, and they've actually been historically lower on the past 4 months, I believe, the past 4 CPI prints they predicted, they've been lower than the actuals. Now they're predicting over that. So if they still come in lower than the actuals, I think that could be poising us for a hot print. But obviously, right, it's data. So who knows? And you just have to be reactive to this one.
So let me ask you, like I said, if we do come in a little bit lighter than expected on CPI, like I said, I'm looking for that strength in tech, that strength in growth, obviously, and maybe even some of those short squeeze names could get going to the upside. If we do get an aggressively hot print, where are you looking in particular for downside, and what are you looking, any names in particular?
Exactly those same names you talked to are the ones that are going to benefit from this will also, I think, be the ones that get hit, especially in the high beta field. We just saw massive rallies across all those kind of high beta names, the speculative names that have been tanked year to date and 2022. Huge rallies. I mean, Coinbase is up over 35%, I think. Like all those names rallied excessively.
Right.
I think those are going to be the ones that have the higher debt to capital ratios to then get, plummeted back into the dirt where they came from.
Yeah, no, it's a great point. I mean, it's interesting because, like you said, those names did rally more aggressively. But like when you look at the large cap names, like Apple is still sort of just like sitting at the lows. Microsoft sitting at the lows. They didn't really get that aggressive pop that some of those high betas got. So I guess it'll be interesting to see how that shakes out going into tomorrow. But that'll wrap it up for us. We'll pass it back to Alejandro.
Awesome. Thanks, guys. Let's talk about the system. I quickly want to give my mindset and approach headed into tomorrow. So we know that CPI is a volatility-inducing event. And I preach that I like to be all cash by the time that comes around. So what that really gives us is one real session of trading. But the mindset is that today is going to be a lot of noise. So if you're really looking to take a trade, if you feel like you have to take a trade, if you didn't trade yesterday, I personally didn't trade yesterday. Price action was slow. I'll explain that in just a minute here. What you really want to do is weigh the risk versus reward. So let's say the market starts to trend higher here. Early in the morning, we see strength. Okay, beautiful. But you have to have that understanding of, again, if I'm going to enter a trade, what is my risk versus reward? What are the odds that I see continuation, knowing that tomorrow morning everything changes? The ideal situation is to enter a trade. The market gives you a really nice trend before CPI, and you get the opportunity to position yourself risk-free headed into CPI. You leave some runners. It presents the opportunity for a really nice win with zero downside because you were only giving up profit. That is like the fairyland perfect scenario. A lot of times what people do is they get in trouble looking for that. They say, oh, I'm going to buy calls early because hopefully I can trim and then tomorrow and then buy put. But what we've seen and what we know about the market the day before the CPI print is that typically, and this is no guarantee that today will be the same, typically the market is choppy. Okay, guys, so first let's take a look at the 30-minute SPX chart, and let's talk about what we saw yesterday. So, of course, Friday buy signal, Thursday trend, 100 points extended from the 50 SMA, which is our take profit rule. The market sells off, comes back down to test near that 50 SMA, gets a nice bounce above the 10 SMA, and this is our visual representation. Bulls are still very much in control until we break down below the 50 SMA. And then, of course, the market's up decently now, 14 points here in the pre-market. So, again, this is a pretty clear picture, textbook system price action. You get the rally, the break below the 10, which is that sign that momentum is slowing after the 100-point extension from the 50 SMA. 50 SMA support test on the first test. And then you get a bounce. And then, of course, the reason why that rally was so strong is because the hourly was telling the same story. Bullish cross, come down, yada, yada. You guys understand. But again, the real message I want to be sending here is that, after CPI, the market is likely to move. Things should get better. We should see some pretty solid price action. The way I like to think about it, Friday and Monday, I made money and I traded really well because the market gave me good price action. And I have to be patient enough to wait for that. If you get caught in the chop, yesterday, I'm sure a lot of people were caught in the chop when we were trading in the chop zone between the 10 and 50 SMA. I tweeted early, I'm not going to be trading. This is not worth it. In the chop zone, we have no idea what's going to happen next. So again, just kind of a proceed with caution environment for me until the market starts to move. But that's not to be said that there aren't other opportunities outside of the S&P, maybe in individual names. We've seen small caps doing really, really well to start the year, but that's, of course, a different story, and that has nothing to do with the system. So we'll see what happens in the next couple of days, and I'll be tweeting about it live once things start to move. All right, guys, but that's going to do it for the system. Let's go to Bet the Bell with Ramsey Rippers. Ramsey, what do you got?
All right, let's do it. Let's get right into it. You guys know the deal. You're going to ask the panel a series of questions and get their answers. We'll see who's right and who's wrong at the end of the day or at the end of the week. So first question, first things first, as always, green or red today. The indices are sitting relatively flat this morning, up about 1/3%. What do you guys got, Alejandro?
I'm going to go green. If you zoom out to yesterday's lows, we've been in a pretty solid uptrend. I just gave my bull case sharing the system that we're above the 50 SMA and the 10 SMA. As far as trend is concerned, I think it's pretty clear that the bulls are in control. I'll go green.
Beautiful. Snipe.
I'm going to have to go with green also. Speaking as the CEO of Green or Red, Bet the Bell segment, I'm going to have to go with green today, and I think we're going to finish slightly green, less than 0.5% green.
CEO. Let's go.
Who awarded you that role?
Myself after yesterday. I was the only one saying red, and you guys all said green.
Did the market close red?
It did.
Did it really?
Wait,
I thought it closed slightly green.
No, the market closed green.
I'm talking 2 days ago.
I was about to say.
2 days ago. 2 days ago.
This kid is
The
so
last
full of
video.
shit. You don't even know what you're talking about.
I thought it was yesterday. It was 2 days ago. The last episode.
Caught red-handed, brother. All right.
Oh, yeah, you're right. The market did close red 2 days ago. All right, whatever. We'll give you a pass night. And last but not least, Mo Mamba.
Who knows, man? We got a nice little bullish close. Nothing too strong yesterday, so I'm going green.
All right, so we got, what was that, 3 greens? All righty. Next question. I'm going to focus on my macro guys. So obviously we got, what do we got? CPI tomorrow, estimate 6.5%. Over, under. Noah, start us off.
I'm going to go over. We're going to come in hot. Maybe not like aggressively over, but over.
Gotcha. Should I even ask Mander this question?
I really should take the under so that one of us is right, but I really want to take the over here.
I don't feel that strongly about it. If you want me to take the under, I'll take it for you. I'll take one for the team. I'm switching to under. For the team, for the brand. I'm going to take under 6.5, and I'll let Manor have the over.
Let it be stated, it is definitely a fake under, and he lies with the over.
All right, and let's see, Hondo. You got an opinion?
Yeah, I'm going under. I don't know why the two guys are debating. Like, you take this. I was going under the whole time. Dwayne Trade was ready to save the day with the under.
Dwayne Trade, the hero of the market, our Dark Knight.
Right.
All right, guys. Third question. We're going to focus on an individual name here that has been extremely strong since they made their earnings lows in either Q3 or Q4 of 2022. Meta. Very simple. I want to know, is the bottom in on Meta? Snipe.
It depends really a lot on what this company plans to do. Because if you ask me, with this whole metaverse situation and everything, I personally don't know what the hell they're doing. So I think the next earnings report could also be a turd. And I think we could see Meta go lower. So I'm going to have to say that bottom is not in. I particularly don't like this name.
You heard it here from Stock Sniper. The next earnings report could be a turd. Alejandro.
All right, so I'm going to be honest here. I liked Meta at $99. I don't like it as much at $130. I don't personally think that the bottom is in for the year. I'm with Snipes on this one. Nobody really knows what's going on with the metaverse right now. I think that that'll obviously change as time goes on. Network effect, as more users start to use this product, it'll grow and become more appealing, but they're nowhere where they need to be at this point. So as far as, what the company is doing, they're still losing a lot of money in their metaverse division. But yeah, I could easily see the stock making new lows before it's all said and done.
Diamond.
I mean, I agree. I definitely could see it making new lows, but at the same time, when you look at it relative to some of the other large cap names, it got really beaten down last year, right? And I think that you could throw this name in the same basket as like a Netflix, where last year the market was so tough on companies that were spending a lot that they kind of threw the baby out with the bathwater. And I think people are sort of realizing that, and that's why these names are rallying here, right? That's why Netflix is pretty aggressively off the lows. I think Meta right here is 50% off the lows. So I could honestly make a case for the bottom being in for the year. I think that when you look at it relative to their peers, they got hit a lot harder. And so I think that they may get a little bit of grace this year, barring any crazy releases with the earnings like Snipes and Alejandro mentioned.
Mander.
I was going to make the exact same point where I'd actually feel pretty confident saying bottom could be in on Netflix with the outperformance it's shown off of lows. Meta, on the other hand, is a toss-up to me. I think it's going to come down to, some crazy earnings report. I don't really know how they've divided their attention since getting destroyed last year, if they've invested less into the metaverse or what. I'll say bottom could be in on this one just for an answer, but.
Last but not least, Mo.
All right, so this depends on the upcoming earnings to me because I'm looking at price action, man. And if we get a nice gap up into earnings, I think bottom is in. But if we gap down off of earnings, then no, bottom's not in. Why? Because the macro perception for the market is bearish. So for now, I mean, that, to me, it's just going to come. I'm the last one to say this, but 50-50. It comes down to this earnings report.
So no one really answered the question. They just said it could be this or it could be that. So thank you, guys. I appreciate that. And the members appreciate that, and viewers do as well. I'm just messing around. All right, last question. So majority likelihoods for the Fed to pivot are set in at November or December. So we set the line at Q4. Will the Fed pivot by Q4? I'm going to ask Diamond. What do you think?
Pivot pause or pivot cut rates?
Cut rates.
No.
Pause is not pivot.
No.
Pause is not a pivot.
Thanks, Sal. No.
Oh my god.
This guy, Nander's just so smart, man. He's got to come for the next.
I just wanted to help my guy Jerome Powell because they clearly stated they didn't want that misperception.
What do you think, Mander?
Oh, for the question, yeah, no shot. While I will say it has been done before, I think in 2000 they had a pause on for 6 months. So if we saw a pause come in like markets are expecting in May, well, no, that still wouldn't put us before Q4. So no, I don't think there's any possibility of this one.
And let's go Hondo.
Well, first off, you should have asked us this after tomorrow morning. But after Mander sat on the podcast for an hour and drilled the fact that the Fed won't be pivoting in the year 2023 into my head, there's literally no way I can say yes that they will. So I'm with Mander on this one. He's got me pretty brainwashed.
All righty. You heard it here. The boys do not think we get that pivot by Q4. So that's going to do it for Bet the Bell. We'll pass it back to Alejandro.
All right, guys. So we're going to go now to today's top watches, brought to you by TrendSpider. As I mentioned earlier in the show, all of the charts that we're using in today's episode are TrendSpider charts. If you like what you see and you would like to join TrendSpider, if you're watching on YouTube, check out the show notes. We have our 25% off link. Ryan will also probably throw it up here in a second, hopefully. And you guys will be able to take a screenshot. There it is. Thank you, Ryan. All right. Let's get started. Diamond trades. Today's top watch. What do you got?
Mine, this is actually Netflix. It's funny that Ryan put Meta because we literally just talked about how they're kind of in a similar position. But this is actually a Netflix daily chart. The reason I like this one, we have a gap fill coming up. We sort of already rejected off of this gap fill. I'm very interested to see how price reacts on the second test. This could be like a double top sort of scenario where we trade lower. And if it does want to break through, you have like a nice volume gap there up to like 350. So $25 upside, at least on this name, if they want to rally it over that gap fill level. So interested in Netflix for sure.
All right, Netflix. Mander.
I'm watching Amazon for a really great upside play here. I think if we do get a hot CPI print, it'll be, fairly easy to just short some of these high betas that have rallied. But Amazon for an upside off of a light CPI print, I think is one of my favorite setups here. Given a little peekaboo above this falling wedge trend line resistance here, I like this one back to at least retest that previous year-to-date low around 100.
All right, Ramsey Rippers.
Yeah, so I got Microsoft today. We're looking at the Microsoft daily here. Obviously, I mean, first things first, great follow through off of this daily rising wedge that printed really for all of November and December until we ultimately broke down. Last week, UBS, I believe it was, downgraded Microsoft sites like outlooks for their specific part of their business. Anyways, that basically sent us right down to the gap fill at 224, and we found some really nice support there. In a hammer candle right off of that gap fill, really nice bounce up to 231.15, where we're seeing posted a double top yesterday. I mean, it's really up to CPI, so you could just throw this TA out the window. But if we clear 231.15 to the upside, those highs from yesterday and the day before, I could see us testing that UBS downgrade gap, if we want to call it, from last week, all the way up to 239.58. I would be super surprised if that gap fills anytime soon, but definitely at least to the entry. So that's what I'm looking for on Microsoft.
All right, beauty there on Microsoft and Mo Mamba.
All right, chip sector guys, NVIDIA here. So you could see off of what 1 day's price action, that nice consolidation up there. So I'm going with that as my call trigger. But one thing about this chip sector, specifically AMD and NVIDIA, when they break through resistance or support, they usually just continue that momentum. You don't get what I like to call break, hook, and go. Come back, confirm, flip that, let's say that 160.3, break through that level, to come back and flip it into support, right? It is resistance right now. I am going to play it with the break, hook, and go, especially with this price action. I can't just chase a breakout. Lots of fake outs happening. So I have to flip that 160.3 into support for a call trigger. And then the 155 is from yesterday's open, a nice little intraday double bottom there. Nice pump from the bell. And then we came back down, bounced right off that NVIDIA open level. So that's my watch for the day as a day trade.
Awesome. Really nice looking chart there, Mo. Simple. That's going to do it for this morning's show, guys. Appreciate you all joining us. For those of you that are unfamiliar, we trade live all day, every day in the Kane Capital Discord. You can go to kane-capital.com to join. But that's going to do it, guys. Again, CPI tomorrow morning. We talked about it. Talked about trading it. I did personally, talking about being in cash, being prepared, being smart. Try not to let yourself chase that volatility, guys. We know that could be a very, very dangerous game. Let's manage risk, trade smart. Hope everybody has an awesome trading day today, tomorrow, and we will see you back here on Friday morning at 8:30 a.m. Eastern time. Have a good one, everybody.